What's good, you guys? My name's Caleb Baker, and this is the Rich Off Gains podcast, Ep.001. Today, we're going to just be talking about different topics regarding money mindset, investment tips, like ETFs you should invest in that pay dividends, and just different news in the market regarding Netflix doing their stock split later this month, and whether or not we're in a AI bubble. So let's get right to it. Starting off with 3 to 5 habits that separate the wealthy from the poor. What is wealth? Wealth is, in my opinion, how much value you can give someone else. It's not about you necessarily. It's about how much value you can give someone else. Value being monetarily, value being spiritually, value being knowledgeably. Like, there's so many different ways you can look at wealth. But to me, that's what wealth means. So a wealthy mindset, someone who has the mindset of a person being wealthy, can do these 5 things and can obtain wealth. A wealthy person focuses on investing in generating income, generating assets. So like real estate, stocks, a business. These are all different ways you can invest and generate income from the money you invest, because most poor people don't think like that. So wealthy people focus on these things while poor people don't focus on these things. They don't focus on an asset that can generate income. They don't focus on learning how to invest and do these different things around the asset that generates income, so that they can replace their time from working to replace that time with enjoying time for themselves, spend time with their family, friends, loved ones, whatever the case may be. While wealthy people do these things every day. And so that's one of the main habits, if you just pay attention, that wealthy people have and poor people don't have. Another thing wealthy people have is their ability to commit to self-improvement or learning. Me personally, I've been on a very, 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 very intimate and serious learning journey when it comes to investing in stocks and learning ways to invest in businesses, because that's what my main focus and passion is for. And I know that what you don't know, you only know what you know, and you don't know what you don't know. So I had to learn and be able to soak up game from so many different people. I had to learn in order to earn. So if I didn't learn the things that I learned, I would not have earned the money that I've earned in the market. I would not have earned the money that I've earned in day trading and doing anything without taking time to commit to learning. So sacrificing time away from going out, sacrificing time away from watching TV. I don't even have a TV. You see this big ass whiteboard behind me. I don't have a TV at all. For those who are watching, I have a big whiteboard in my room. And this is my personal room. I sleep in here. So I don't have any kind of TV for me to turn on. The reason being is because I don't have time for that. I don't like taking time away from my youth for me to be entertained. I've been blessed to have a very abundant life at an early age and be able to travel and meet a lot of people and do a lot of things. I'll tell you guys more on that later. But I'm to the point now where I just want to focus on building assets. And so being wealthy takes sacrificing time away from those entertaining things to be able to focus on building, refining and retuning yourself and building up yourself in order to be in a position to where you can apply knowledge that is giving you 10 times the amount of value that you would get if you worked the job. So that's number 2. So number 1, we had focusing on investing in income generating assets. Number 2, we had committing to self-improvement and learning. Number 3, wealthy people focus on good sense of control or discipline. Discipline is such an important habit to have especially if you're trying to build wealth, because let me tell you why. If you, every time you get a paycheck, the first thing you do is you go buy a bottle of liquor, or you go buy some weed, or you go buy whatever it is you go buy, food, whatever, and you don't put any money away to save or invest, you're already losing. You're already failing yourself. Not anyone else, just you. You're already failing yourself. And the reason being is because you're not putting anything away that can help add value to you later. Only thing that you're doing is putting money into things that are just going to burn you out, energy-wise, physically wise, health wise, all these things. So it takes discipline. It takes sacrificing, delayed gratification. It takes delayed gratification in order for someone who's wealthy to understand that they can put away X amount of dollars, $1,000, $10,000, $100, however much, just to get an obtained goal later. They don't mind buying the used car. They don't mind, eating at home. They don't mind not keeping up with the Jones. A lot of times people are so caught up in social media and they think that everything is instantaneous and you have to keep up with the Joneses. You don't have to keep up with the Joneses. I'm here to tell you that now. You do not have to keep up with the Joneses, because at the end of the day, everybody's living a fake lifestyle on social media, and that's just the reality. So why are you trying to entertain people you don't know virtually when you can be focusing on your real physical life? And yeah, it might suck in the moment, putting things away, putting up money to save and investing into things now, but later on, like I said, delayed gratification, later on, whenever you look back on the time that you had to invest, whether it be buying Bitcoin, buying stocks, whatever it is you're buying, and you look back on that time where you were taking the time to discipline yourself and invest, now, 5 years later, 10 years later, you're way more further along to that compared to that person who didn't. So it's important that you build up a disciplined habit in your life so that you can have the things that you want later. Number 4, they have a routine. Wealthy people have routines. Poor people don't. I have a routine. I wake up, I go to the gym, I come home, I trade, and I study. I literally do the same thing day in and day out. And it's boring. It's very boring, but it's repetitive, and it's a system that works for me. So I'm pretty sure other wealthy people who have made millions of dollars, hundreds of millions of dollars, billions of dollars have routines. They have systems. They have a process about the way they go about their day that helps them succeed. So if you want to be wealthy, if you want to be someone who's successful, you got to have a routine. You got to have a set schedule around, the things that you do. And it doesn't have to be, every single day. Well, it does have to be every single day, but not like to the point where it's overbearing. It has to work for you. So whether that's waking up later in the day and starting your day later, whatever it is that works for you, just do that. Some people don't have the ability to work 8 hours a day, 12 hours a day. Some people do. Some people don't have the ability to work less than 4 hours. Some people do. So it just depends on what works for you. Always do what works for you, and do it really well, because mastery is the key. Whenever you've fine-tuned your routine, now it's mastery. Kobe showed up to the gym 3 times a day. Okay? He showed up to the gym. He didn't just show up to the gym. Like, it's the way you show up. You have to show up and give it your all. You have to show up and give it every single fiber in your body and ability to execute and go hard. So having a routine is very, very, very key, and being consistent with the routine is also very important as well. So that's the habit number 4 that wealthy people have that poor people do not have. Number 5, lastly, wealthy people have a positive, optimistic, but realistic outlook on life. What does this look like? Someone who's very, very, very positive and always, optimistic and forward-looking about a situation. Like, if something bad happens, they digest it, they analyze it, and then they find a solution, they move forward. They don't overthink it. Like, realistically, we're not gonna sit here and just be like, okay, well, what do we do next? No, we're gonna figure out a solution to the problem, and we're gonna move forward. So being positive in the negative, but also being realistic in the negative as well. So like, you're not just ignorant to the issue or the situation that's at hand. You're acknowledging of it. You analyzed it. You broke it down. You digested it. Now you're looking for the most positive. You're looking for the most positive outcome from this situation, while being realistic. So most wealthy people have that ability to just be positive on the things that happen, whether it be good or bad, whether it be a win or loss. I've taken L's in the market, and when I lost early on, when I first started trading, day trading, investing, taking investments, I never lost an investment, thankfully, so far, as of right now. Actually, no, I take that back, I have, but it wasn't like big losses. I've taken more bigger losses day trading. So when I've taken losses in day trading, I've reacted to them negatively, and that had me have a certain outlook on the day going forward, because I realized I let the emotions from taking a loss control my reaction. And so I had to control the way I reacted. When you control the way you react, it allows you to not only have a better outlook on life, but move through life a little more stress-free. At least for me, it does. So being more positive and optimistic about any situation just allows you to be more stress-free and just be more laxed about things. You're not too, pressed about situations not going your way and things like that. It's kind of like an open mindset at that point. So it's a good habit to have if you're trying to build wealth, because not everything's going to go your way. And those are the 5 habits. So let's talk investing tips. These are 2 ETFs that you should invest in that pay monthly dividends. Okay. One focuses on quality. The other one just has a better return, but they're both really good ETFs. You can invest in both if you like, or you can invest in one or the other. It really doesn't matter to me. These ticker symbols are ticker symbol SCHD, which is the Charles Schwab Index, and then ticker symbol SPHD, which is the QQQ S&P 500 Index. These are 2 ticker symbols that you guys want to pay attention to. Currently, the Charles Schwab Index is paying about a 3.87% yield monthly dividend. That's not monthly, however, I'm sorry. So 3.87% yield is the annual dividend it pays, which is pretty good in the market, but it pays that throughout the span of the year. So you just want to divide that 3.87 into 12, and that is the number that it pays per month. Same goes for the SPHD. HPHD is projected to be returning a roughly about 4.4% yield, so about a 60-cent increase compared to the Charles Schwab. Like I said, Charles Schwab focuses more on quality stocks, while the S&P focuses on the overall high-paying yields, things like that. Not only does it focus on high-paying yields, it also has a less expense ratio. So currently the SPHD has a 0.3% expense ratio, while the Charles Schwab has a 0.60% expense ratio, and I believe that's due to it being a higher quality focus on higher quality stocks. So in my opinion, Charles Schwab is the way to go, given that it focuses on higher quality stocks. I like their approach to their analysts, the way they analyze the stocks that they buy. If you guys want to look at that, there's more details on it online. Just look up Charles Schwab SCHD, and you'll be able to pull up the overview about how it basically breaks down their investment strategy towards the particular stocks that they invest in. But they look at like a 10-year time frame of projected income. They look at 5 years of increasing growth and dividends and something like that. And then another thing that they look at too. So I like that about their investment strategy. So I prefer, personally, I would say buy SCHD if you guys were to buy it. These both are less than $50 per share, so you're not investing too much money into these. So yeah, these would be some good investments to look at buying if you guys would be interested in buying ETFs. Those are the 2 that you guys want to buy. Comment below if you guys are already invested in stocks or ETFs as well, and let me know your favorite stocks and ETFs you guys are currently invested in. If you guys are new, make sure to leave a like and follow. This is the first episode of Rich Off Gains podcast. I plan to do these every week. Not sure exactly what day. Whatever day this goes up, I would probably try to do those each of those days every week, and we're gonna just continue to pour into you guys and give you guys value. So make sure you guys are sharing this with people you know who are learning about finances or who enjoy talking about finances. And let's continue on with the show. So Netflix announced they're doing a 10-for-1 stock split November 17th. Is this a good time to buy? Somebody asked me this. Is it a good time to buy this stock? Currently it's sitting at about $1,100 a share. Their previous all-time high was roughly about $1,300. Let me look it up real quick. I believe their previous all-time high was $1,300, but let me double check. Yes, so their previous all-time high was $1,323.12. Me personally, my target price that I'm looking to get into this particular stock at is around $992.34 or $926.18. Those would be my two levels to buy it at. So after it does the stock split, it'll be about $92.60, give or take. So if you guys want to buy it there, that'd be a great price to buy it at, in my opinion. I don't mind the price that it's at now, the $1,100 price. I just preferably want it to come down a little bit lower for me to get in it at a discounted price. But $1,100 is not a bad price at all. I definitely can see this going back up to over $1,300, if not even $1,500. And then after the stock split, of course, it'll be roughly about $150. So I definitely think that Netflix should be on your watch list for stocks to buy. If you guys are interested in it, it owns the majority of the market cap in that streaming space, given that it started out so early. And they're doing a lot of things really, really well. So I think that Netflix is definitely a really good buy. You guys should definitely take the time to buy Netflix. Moving on, let's talk about this AI bubble. Are we in it? And how are the stocks going to be affected? So early 2000s, the dot-com crash was a time where people, and I actually was not born at the time. I was born in 2002. So I did a little deep dive and looked at some research, and pretty much what the dot-com bubble was a time where a lot of new startups were crashing after the dot-com era started with, tech. Tech was a booming demand, and it still is a booming demand, demanding industry. And, a lot of startup companies were just failing to deliver on the things that they said they were. So a lot of overinvesting and overinflation around tech companies at that time was what caused the dot-com bubble to pop. Once it popped, everything crashed. So essentially, they're comparing that situation to what's going on with AI and the investments behind AI, the inflated investments and the overinvesting. Is it a lot? Is it too much investing? And will there be a crash? Yes, I think there will be a crash, but I don't think it'll be as bad as the dot-com bubble. I think that there will be, the stocks that will be most affected will probably be startups again. And I don't think that major companies like Meta, Nvidia, Apple, Microsoft, I don't think the major tech companies will be super duper affected. I do think they'll come down to, discounted prices in that scenario, but I don't think they'll just crash and, not be recoverable from these situations, because AI is becoming more and more of a demand each and every day. We're seeing NVIDIA come up with new deals and partnerships that they're doing with so many different sectors like health, travel. Tech's already been a big play in that space. So I don't think that, these companies won't recover from an AI pop if there is a bubble. However, I do think that small companies will be affected in some format, and the companies that will be affected are the companies that just are low quality or not, overperformers or performing at a high rate, are just like a very, very small market cap in that space. So I do think that most companies that will be affected will be companies like that, but it will provide an opportunity to buy your major major tech companies, major companies in the leading sectors that you like and love to, take position in. So I don't mind if it is a bubble. We're getting the best of both worlds as of right now, at least. If it is a bubble, because we're seeing market reach all-time highs and breaking new records and going higher and higher, which is good for those invested. But then if there is a bubble, it's just going to come back down to a discounted price for the stocks that you like and love. So it'll just provide more of an opportunity for those kind of stocks for a reinvestment play. So I'm going to reap the benefits whether or not it is or it is not an AI bubble. If there's not, there's going to be some other catalyst or news that comes out that will make the market have a correction or some type of crash. So I'm always going to be prepared for a reinvestment play in those aspects. But yeah, that's my thoughts and opinions on that. So other than that, man, I just want to say thank God. I'm very blessed to be able to do something like this. I'm 23 years old now. I just turned 23. My birthday was September 30th. And, life has not been easy. In the last few years, I've made over 6 figures. And I've also lost over, not 6 figures actually, I've lost closer to about 30,000 from investing. So I learned a lot in that space. It was like the last 2 years where that happened. So I learned a lot from those kind of things. And I've been blessed to be able to recover and just really, really navigate the life of an entrepreneur to the best of my ability, given the circumstances. I don't have a job. I've been a full-fledged investor ever since I graduated high school, since I was 18. And God has just always been there for me. He's always been able to watch over me and continue to just put his hands over me throughout all the losses financially, mentally, spiritually. I've lost family and just so many different things. God's been there. And I learned so many different things as well from so many different people. Like I said, having mentors and just being in groups and communities, I've been blessed to meet people and build connections and relationships with people that I look up to and respect. And, the one thing that's stayed consistent is God. Throughout all my life, not even just the last 5 years, but all my life, God has always been there for me. So I just wanted to take the time to say thank you to him and, give a little praise and a bit of a testimonial to the King. And hopefully for those who are watching, just know not to give up. Continue to show up for yourself and continue to apply consistent discipline and knowledge that can move the needle for you and your family. Because for me, I want to move the needle for my family. I just lost a family member a few days ago. And it's a sad thing to see, your family leave this earth and not have anything left behind. No family, no finances, no impact in the way that will be remembered past your generation. And so I say that to say, just, do something that is meaningful and purposeful, live with intent, because life is not meant to be taken for granted. Life is meant to be lived to the fullest. So starting a podcast is one of my many things that I wanted to do. So I did it. I released some books earlier this year, some short ebooks, and I'm doing some free courses right now that I'm working on for people to learn about investing and day trading. So I just want to add value to people's lives and do the most, as much as I can to just give back. And throughout that process of giving back, also building myself up, building my family up, and helping them be financially free and obtain financial freedom. So with that, I'm enjoying the process and enjoying the philanthropy and giving back. I'm doing some give back. I'm participating in food drives and stuff like that. And I'm also coming up with a way to host my own. I might not host my own this year, unfortunately, just because it's such a last minute thing. But I might try to pull something together and just, give back some food or something to those in need for Thanksgiving. It's the holiday season, so only right way to do it. I'm not a big celebration person when it comes to holidays, but I do believe in, giving back a lot. So I definitely want to give back to people this holiday season. I think I did that last year as well. If I'm not traveling, I'm giving back. It's one of the two. I'm always open to giving to people. So yeah, but hopefully you guys enjoyed this first episode. I will see you guys in the next episode. This is the Rich Off Gains podcast. It's your boy Caleb Baker. Thank you guys for watching. I'll see you guys next time.